Welcome back. It's 5:41 and your money this morning. You know, walk the streets asking about money on a day when the market plunges 500 plus points, and it doesn't take much time to find people who are stressed about what's going on.
I see my retirement going up in smoke.
I don't think I'll be able to retire till I'm 80.
It's kind of scary that we're never going to get out of the recession.
Each and every day I'm catching absolute hell trying to pay my rent, trying to pay bills. The thing that scares me is I'll be on the streets.
Joining us now in the Information Center is Mark Brown, financial planner, co-founder also of Brown & Tedstrom. Mark, it's good to see you. Thanks for coming in.
Good morning.
You hear the fear and concern. What are you telling your clients right now?
Well, you know, I got an email last night from a client, and you tend to have a certain number of people that hit the alarm when things get scary out there. And it's almost a signal that's saying that maybe things might be going the other way. But what we're telling clients right now is that really the fundamentals are quite strong, and I think people, what they're really worried about is this the beginning of another 2008, 2009 where the stock market dropped 35 or 40%? And we just don't see that. And again, the fundamentals are strong. In fact, if you look at just one of the most basic measures is the PE ratios of the S&P 500, they've never been as cheap as they have on a trailing basis since 1990. And on a forward-looking basis, it's never been as cheap as, say, March of 2009. And since March of 2009, we've had almost double of the stock market since that time.
So when you say fundamentals, we're talking about corporate earnings, which so far we've had pretty good reports up to this point in time. But there's a lot of fear about what's going on in the economy overall, not only here but over in Europe. That doesn't worry you at all?
Well, I mean, there's always something to worry about, and certainly we have problems, but we're always going to have problems. But markets are resilient, and as you can see from 2009, we've had such a tremendous rebound that it's very difficult to time the market. And we say you have to have a plan, and you have to make sure that that plan is consistent with your time horizon, your time in life. But generally, you have to be in equities in order to pay for things. Right. So,
what are the odds, though, that you think we might go into a double-dip recession here?
Well, when you have a big market drop like we did yesterday, that definitely affects confidence. And people will tighten up their wallets, and businesses will maybe suspend spending. But in general, we think the odds are very low.
What would cause you to change that outlook? Anything at this point?
I think that if you saw employment numbers really decelerate, that would be a very bad sign. I think if you saw manufacturing activity really drop off the map, that would be a bad sign. I think if you saw European banks fail in big numbers, that would be a very bad sign, and things that would change our outlook. And
in fact, you're looking for some buying opportunities today.
Yes, in fact, you never know when the exact perfect time is to buy, but we are definitely employing capital right now, and there's a lot of money on the sidelines across the world, really, that you have to look at these times to put money in. I will tell you that everybody wants to buy low, but usually the times when you're buying low, it's surrounding a situation or the news is unpleasant. So you just have to somewhat hold your nose and go in.
Mark Brown with Brown & Tedstrom.